Look at him, eating whatever he wants, never gaining a pound. While I'm stuck with the boring special and can't lose an ounce.
How's your lunch, man?
Amazing. Yours?
So good.
Oh, I'm so happy for you.
Cool, buddy.
Weight loss isn't fair, but Mochi Health is. The affordable GLP-1 source that can fix your frustration with food.
So, same time next week?
No!
Definitely.
And your friends. Learn more at joinmochi.com. Mochi members have access to licensed physicians and nutritionists. Results may vary.
Know someone in your life celebrating a birthday? They deserve to feel truly celebrated. That's what 1-800-Flowers has helped people do for 50 years, turning everyday gestures into meaningful moments of connection. And this April, during their 50th birthday celebration event, when you buy one bouquet, get a second bouquet 50% off. Celebrate more birthdays with our 50th birthday event all April long at 1-800-Flowers.com/podcast. Buy one bouquet, get a second bouquet 50% off at 1-800-Flowers.com/podcast.
Live from the back of Ruth the Realtor's car, it's the Stacking Deed Show. I'm Ruth's neighbor and part-time mechanic, Neighbor Doug, broadcasting live from our spacious, luxurious trunk recording studio. On today's show, we're throwing the usual format out the window because it's time to help you build better credit. We're talking to experts in the area who will help you get your credit in order so that your next property financing will go as smooth as butter. First, from Experian, say hello to Christina Roman. And from StellarFi, Lamin Zarrad. And now, two peeps who can turn your credit into a gold mine. It's Crystal Hammond and Joe Saul-Sehy.
Well, thanks a ton, Doug. And I am Joe Saul-Sehy, Average Joe Money on Twitter. I'm super happy to be here helping people get their credit together with my amazing co-host, Crystal Hammond's in the house.
Hello, everybody. I'm at Condo Crystal in the Twitter streets. Yeah, I've had quite a credit journey myself, from the toilet to the Taj Mahal, I would say.
Me too. I like the alliteration there. And we'll get into that. But Crystal, we've got some amazing guests with us today.
Yes, so excited to bring some credit actual experts in to help our deeders figure out, like, hey, where am I on this journey? And then how can I pick up and run to the Taj Mahal with my credits?
You're going to keep this going the whole show, aren't you?
Yes.
Yeah, absolutely. Well, let's meet them. First of all, our good friend from Experian, Christina Roman's here. I almost called you Kristen Roman. You want to change your name for me, Christina?
No, I like Christina.
So thank you so much for joining us. And your job at Experian is helping people get their credit better.
Yes, that is what we are passionate about. We want to give people as much knowledge as they can possibly give them about credit, improve access to credit, and that starts with education on credit. So really happy to be here. I'm super passionate about this, and I'm excited to talk about this topic with you all.
And well, Christina forgot to mention the credit chats with Experian on Twitter. I've participated in a few. I've won a gift card too during one.
Oh, that's awesome. That was a newer thing we started a couple years ago, but credit chat's going on its 11th year. So crazy.
Crystal won one gift card. Now she's financially independent, Christina. True story.
There you go. Yeah. Mic drop.
That was the catalyst.
Thank you for helping my co-host, because, you know, there's no money in podcasting. You do it because you love it. And the gentleman behind StellarFi is here. Lamin Zarrad is with us. How are you, man?
I'm doing great. It's great to be in the Taj Mahal. Thank you.
Well, you kind of are. You're dialing in from a beautiful place in Utah.
That's right. I'm spending a few days here in Utah, in Snowbird, Utah, at MX Summit Conference that brings fintechs and banks together and, you know, creates a great opportunity to discuss all kinds of different problems. I'm actually leading a credit discussion later this afternoon.
Oh, well, thanks for participating in ours first and then leading other people. Let's talk about, you know, I think the name Experian, most people know. More and more every day know StellarFi, but there might be people that don't. You talk about fintechs. You guys had quite a fintech journey. Tell us about StellarFi and what you do.
Of course. So StellarFi is a bill pay platform, first and foremost. We've identified that 2/3 of the American adults have bad credit scores. It's a crazy statistic if you think about it. And this is a country that is very much grounded in consumer credit. We have monetary policy that influences interest rates to influence how much consumers can borrow and spend in order to, move this whole ship forward or stop it. And lo and behold, 2/3 of the population doesn't have good credit scores. And so we thought, well, why is that? This is one of the wealthiest countries in the world. Is it really about the resources? And what we discovered is that, it's not always about the resources. It's really about management of your bills. Even high income earners are habitually late on paying their bills. Most Americans pay their bills within 45 days of the due date. And we thought, what if we created a bill pay platform that helped you pay your bills on time and created this discipline around repayment? And then what we could do is we then create a better borrower. Anyone who uses StellarFi becomes a better borrower, and then they can borrow at better rates and, improve their lives and really access things they couldn't access before.
Well, our deeders certainly need good credit to buy their next property, to dive even more into real estate. So let's talk about your own journeys, because Christina, you've been very open about your journey. You've had kind of a little bit of a rough ride like Crystal and I had. You mind sharing a little bit of your journey?
Absolutely, yes. And I am not shy to share this journey because it's something that I'm very proud of. Straight out of college, I made every mistake you could possibly make with credit because I didn't know how credit worked. I'd always been told, stay away from credit. Credit is a devil. And that was about as far as my education went on credit. It was just something I should never touch. But being a 20-year-old, I decided that I absolutely had to have a computer. And so I didn't have the money to buy the computer, but I had heard that you could get a credit card and pay for that computer. And I applied. I got approved for a $1,500 credit card, and I had never had access to that much money. Again, I was a broke college student. I never had $1,500 at one time in my hands. And so it didn't even make it to my hand.
Probably.
Yeah, probably. It didn't even make it to my hands before I started thinking about all the ways that I could use it that did not include purchasing that computer that I had initially planned to purchase it using. And the minute I got it, my friends and I went to the mall. We went on a huge full day shopping spree, and it came with a 0% interest rate for, I think it was 12 months. And I thought that meant that I didn't have to pay it for 12 months. And I had just graduated. I was in the process of looking for a job. So I figured in 12 months, I'll definitely have a job. I'll be able to pay this off. So I wasn't worried about it. But then the bill started coming in and I was like, well, this is weird. Why do I have a bill when I don't owe for 12 months?
Yeah, you probably didn't even open them, Christina, because you thought they were.
I was like, whatever. Yeah,
you probably thought they were you thought they were thank you notes from the company. Thanks for working with us.
Yeah, I thought they were just updating me on my balance, and I was like, well, I don't need to see that. And so I missed all the payments. I lost the interest rate, and my credit definitely tanked. And then I started getting collection calls. It stressed me out. I was asking them, well, didn't I have 12 months to pay it back? And they said, no, that's 0% interest. And I was like, well, what does that mean? I don't understand. And this all comes down to education. If I had just known credit worked, if I had done the due diligence and done the research, but I was flying by the seat of my pants when I did this. And I realized that that was a huge mistake. I tanked my credit really early in my 20s. And then when I needed to do something like buy a car, I went in there very confidently and applied for a loan. And I was approved at a 19% interest rate. Again, I didn't really know how high that was at the time. I was with my mom, though, who had always told me to stay away from credit. And when she heard that number, she freaked out on me. She started yelling at me at the dealership. And then that continued all the way home. And I was like, well, I didn't know what I was doing. And so after that, that was the wake up call to like really start to look into credit, to figure out how it worked, to figure out how I could improve it. And then a few years later, I ended up getting a job at Experian. And I was very honest with them when they were going to hire me that, hey, I've had a pretty storied background with credit. Like, is that going to affect me? And they said no. And actually, it worked in my favor because my boss, Mike, who's incredible, tasked me with doing credit education on social media. Yeah, Mike Delgado. He's amazing. Yeah. Mm-hmm. And I said, Mike, I made all the mistakes with credit. You don't want me teaching people how to use credit. And he said, no, actually, you're the perfect person to do it because of all the mistakes that you made, because you're coming from a perspective where you had to learn about credit, because it was a necessity, because you needed to rebuild. And so he said, people don't want somebody that's been perfect with credit all their lives to teach them how credit works. And so that began my credit education journey with Experian.
I thought the same thing, Christina, when American Express was looking at hiring me. And I was going to give speeches on behalf of the company. I'm like, did you guys do a background check? You didn't trust me with a credit card 10 years ago, and now you're going to hire me to speak on behalf of you people? But I felt like I, socked it to them. I got my monies back through working for them. Crystal, I know you've got some of that story like Christina's too. You weren't great with credit at first either.
Well, no, and just like everyone else, it started for me. Well, not everyone, but it started in college. It's like, well, did you read the terms? No, I'm in college. Who has time to read one more thing? So all of that stuff got
Well, it's
thrown
just
in the
like
garbage.
you read the Apple iTunes terms and conditions. Yeah.
Right. No, just give it to me. I agree. Give me that free t-shirt or free basketball. I agree. And just like Christina, I was told just stay away instead of being educated, the dangers or the why or just any kind of education of how to use it. Now I say, use your credit for good. You could do it. You can use it. And I also tell people, hey, if this TV was an extra 30%, would you buy it? And they're like, no. I was like, well, that's what you do when it's on a credit card and you don't pay it off. So it's just small things that I've learned from, following the blogs and the credit chats and things like that. Because college, even my mom was like, you don't have a job. How are you going to pay that? I was like, they know something I don't know because I got a credit card.
It's so magic.
Same thing with the car, the buy here, pay here. I was like, I got a brand new 12-year-old Chevy Cavalier from, the buy here, pay here place for a 22% interest rate because they're like, we don't care about your credit. You're going to get a car. I'm like, no, I'm not. You haven't seen the numbers yet. And they're like, oh, yes, you are. But it was like a 22% interest rate. And I'm like, yes, joke's on them. I got a car.
Mine was actually worse than that, Crystal. A friend of mine told me that car dealers will give a car loan to anybody. And I really needed a car for my young twins. And I come clean with this guy and I was just a disaster. So I walk into this car dealership and I tell the guy, I said, hey, I'm a credit nightmare. He goes, oh, no problem. He goes, just give me your social security number. I'm good. He's gone forever. He is gone for completely ever. He comes back and the only thing he says is, dude.
Oh, man. If you can't impress a car salesman, I don't know what you've done.
It was that bad. I mean, you and I have spoken a few times, but I don't think I've ever heard your credit story. No. Were you good with credit?
I was never good with credit. This is why I'm doing what I'm doing. I built this company to help myself climb out of my credit problems. So my story is actually very similar, too. I'm an immigrant. I came to the U.S. at 16. And my family, we escaped an ethnic conflict now in the country of Azerbaijan and, came here with no money, very, very low socioeconomically, so to speaking, without really any knowledge or understanding how the system worked. But one thing I had going for me, my stepfather took me to Dillard's. We lived in Georgia at the time. And he said, you need to build you credit. And so we went to Dillard's. He co-signed on the Dillard's store card and I bought a pair of slacks. And that was the beginning of my credit journey. And I thought, this is crazy. People giving me money for free.
I can buy high thread count sheets.
And so I started buying stuff. And, lo and behold, I was behind on my payments. I was in high school at the time. I was working, at a grocery store, really restocking shelves. And I had to join the Marine Corps. Like, that was my only option. Like, no one was going to hire me. My credit was absolutely awful. I joined the Marines. In the Marine Corps, I made more mistakes. Now I had a steady paycheck, and I thought, well, now I can totally pay my bills. And so I got a car that I shouldn't have purchased. It was too expensive for me with the interest rate in double digits. And that, took me further into debt. And then I deployed, and this is not military's fault or my fault. It happens all the time because of the admin glitch. I didn't get paid for 6 months while deployed to Iraq.
Oh.
And, as you can imagine, like all of my bills are behind. My credit was completely ruined. And there's this thing called Service Member Civil Relief Act that you can use when you come back to then argue and dispute things. And technically, institutions are supposed to abide by it. Man, even with that kind of government protection, it took me years to rebuild my credit. My credit is still bad. To be honest with you, it's super volatile. Like, it can go to 800. And if I run any of my cards up in terms of the utilization, it tanks.
Yeah.
For that reason. And so I've struggled with credit issues, but as a result, I really sort of like reverse engineered what that means. Like, what is the credit score? What influences the score? My profile is so robust. That's so many lines. I've owned so many different vehicles. I've made so many irresponsible decisions. I don't know exactly what the impact of the score is. And that's kind of, I think, what's driving our vision here at StellarFi. It's that my personal experiences and ton of missteps that I've made.
Well, you're definitely not alone. I worked with, when I was a financial planner, some anchors at the local TV station that I was on. And this one anchor made nearly $300,000 a year. And this is 15 years ago. And she was so busy, Lamin, she didn't pay her bills on time. And the first thing when she hired me, we did was set up automatic payments for her bills. The StellarFi wasn't around then. So we just set up automatic payments and her credit got better in a 6-month period. It was so much better just by paying her bills on time.
Yeah.
Wait, is that why you're a podcaster? You think as an anchor you can make $300,000?
Someday.
It's a lie.
Someday it is. You'd think like 13 years later, I'd know that. Yeah. Christina, let's start with you because Lamin brought up the basics and I'm glad everybody is. This is what I love about this roundtable is you guys all are just rockets with your life, with your credit, with teaching people. Like we've all come back from this. So everybody listening can come back from being a credit disaster. But it starts off with education. So Christina, let's talk about this. What is the most important factor when it comes to getting your credit score improved?
The most important factor is exactly what Lamin just talked about. It's your payment history. It's making those payments on time every single month. And if you miss a payment, if you have to have missed a full billing cycle before your creditor will report you to the credit bureau. So I'm not saying if you're like 5 days late, you may pay a late fee on that bill if you're a couple days late. But if you miss that entire billing cycle, you don't pay it for a month or a couple of months, it could be reported to the credit bureaus, and that can significantly hurt your credit score. So I always tell people, make sure that you know those dates. I'm old school. I keep a pen and paper list that I check every single month, first of the month, or as soon as I get paid. All right, what bills have I paid? What bills have I not paid? Or automatic bill paying is another great one that you could use. So that way you make sure that you're making your payments on time. It comes out exactly when you need it to. And that is really the biggest factor that's going to impact your credit score. So really want to drive that point home for people that are on that road to recovery or that are building credit right now.
Yeah. So Lamin, let's talk about that because that's exactly what your company does. How quickly do you see credit scores begin to improve? How much do you see them change when people do those on-time bill payments?
So we see score improvements within 30 days, but it's not just because of the on-time bill payments or the history. We're structured in a way that's kind of unique. Think of us as a kind of reversed engineered credit card. Instead of giving people a credit card and taking a bunch of risk, what we do is we give them a bill pay platform, have them link their bills, and then we use our money to pay their bills. And then they pay us back, right? And so as a result, on the back end, we create a trade line for them. It's a revolving trade line. And because that trade line is the size of the bills that they link, someone who couldn't qualify for, say, a $100 card somewhere else can, hypothetically get a $2,000 trade line with us. And this could be completely like revolutionary or overhauls their profile to that individual. And so as a result, the credit utilization ratio jumps, their score improves, and then that's our sort of a short-term solution for someone's credit improvement. And we see that improvement within 30 days as soon as we report it. And then, of course, as they pay their bills on time, there's a long-term sustainable solution where, the score improves slower but more consistent, and naturally their profile is now a lot more attractive to lenders.
Christina, you guys noticed, I think, that a lot of the bills don't show up on people's credit. Mm-hmm. So I'm thinking about Boost, right? Because you guys have a program that kind of also helps people see credit scores go up. And do you also see when people start paying their bills on time, this 30 days like Lamin's talking about?
It depends on their credit history, really, as to how quickly it's going to improve. Definitely, when you start to pay your bills on time, you will start to see a little bit of improvement. I think also combining that with if you have a lot of debt and paying that debt down, you'll really start to see those big strides in improving your credit. So it depends on the person's credit history, but yeah, you'll start to see an improvement fairly quickly.
Where does the amount of, because Lamin was talking about, StellarFi gives them money, which means that they now have more credit available, but makes them look more attractive. Where does that fall on the things that determine a credit score, the amount of open credit you have that isn't being used or maybe is being used?
Yeah, so that's called your credit utilization, and that's actually the second biggest factor.
Okay.
So in most credit scores, and just about every credit score, and people often get caught up in the model, it's important to focus on those factors because those factors are what are going to impact your credit score. So payment history, biggest factor. Credit utilization, second biggest factor. And your credit utilization is basically how much credit you're using versus how much credit you have available to you. So what Lamin says makes sense. You get a trade line, you're increasing your overall available credit, you're reducing your current amount, that you're reducing the utilization because you're making that total amount bigger than what you currently are using. So the lower that number is, the better. A lot of people, they get caught up in this misconception that they have to carry balances in order to see an improvement in their credit score. They get caught up usually a 30% balance that they have to carry. That is not the case. We really emphasize to pay them the balance in full every single month if you possibly can. Otherwise, keep it even as low as 10%. If you can pay off up to at least 10%, that would be even better than that 30%. But pay it off because you're just paying on that amount that you owe. You're paying interest on that. So you're paying extra for that.
Yeah.
So,
yeah.
And
Crystal,
another,
go ahead.
Another misconception that I've heard people say, they're like, oh, I'm going to just pay this card and then I'm going to cancel it. And then I try to say, hey, you shouldn't cancel it because then that also lowers your available, right?
That's right.
Yes.
Available credit.
Yeah. What helped me understand this, because all of this is like super esoteric and complicated and all these rules, and I never understood why. Like, why does this matter? Why does on-time payment history matter? Why does utilization matter? What helped me understand this concept is kind of putting myself in the shoes of a lender. The credit score is designed to help a lender make a decision on whether to give you money or not give you money. And if you think about it, on-time payment history is probably the best thing for a lender to know. Like, if I'm giving you money, I want to know, do you pay your bills on time? Do you pay your other obligations on time?
Am I going to get paid? Yeah.
Yeah, exactly. Am I going to get my money back from you? And that's the clearest indication that you're going to be a good borrower. And of course, utilization, if I'm a lender and I'm looking at you and you have a bunch of credit available to you, meaning that other lenders are taking risk on you and you're not abusing it, right? You're using a little bit of it. That's another really strong signal to me and thinking, man, this is a good borrower because they clearly can borrow money anywhere else, but they're borrowing here and they're not abusing that and they're not, running it up and they're paying their bills on time. And so when you think of the credit score from that angle, it kind of makes sense suddenly, right? It makes perfect sense. It's just a quantified version of that rationale, that logic.
It's funny though, Lamin, as you're talking, I'm thinking about, I want my credit score to be higher, but also there was a time, just to be very frank, that I couldn't trust myself. I did not have the right systems in place. I was too addicted to the dopamine hit of going to buy something. Like I remember the feeling I just got, I just really need to buy this stupid thing, And then later on, I put these checks and balances in place, right? Let it sit in the Amazon cart for 24 hours before I do anything. I look at it the next day and I'm like, maybe I shouldn't shop when I'm hungry, but I shouldn't shop at all. Maybe I should use, Amazon Block or something. But I put these systems in place. So for somebody just starting out, is it better? And I guess, Christina, I'll go to you first. Is it better to ignore that credit utilization number and just cancel cards and make sure that you can't get out of hand? Or is it better to build systems first and leave the credit open so that your credit will rebound quicker? Which one should people do?
Put it in the freezer.
Yeah, I was just going to say, go to that old school method, get a big bowl of water, stick that credit card in there and pop it in the freezer.
I did that, by the way. And I have to tell you, I literally was at my kitchen sink with a hair dryer. Like that is,
you don't have any hair.
That's when you, that's when you know you have a problem right there.
Yeah. It really depends on your own self-control. One of the things that I did when I was like, okay, I don't want to close this credit card account, but I know that I don't have self-control with this credit card, is I shredded it and I didn't use it for a while. I didn't use it until I was like prepared to use it again. This again is my own personal journey, but after so many months of not using it, it won't be factored into your credit score. So that's something to keep in mind. But for me, it was a self-control thing. I needed to stop using it, but I didn't want to close the account. I wanted to continue to pay it off. And you still have to pay it off. Even if you close that account, you do still have to pay it off before you can close it. So that is something to know. You can't just call and say, well, I made a mistake with this account. I owe you a ton of money. I want to close it. They're like, wait a minute, but you have to pay it down. So if you're in that process, one of the things you could do is have a significant other put it where you don't see it or shred it or freeze it, that way you can't touch it, because the worst thing you can do is when you're trying to pay debt down is to use that available credit that you've now made available because you've worked so hard to pay it down. So that could be an option.
But that's super interesting. You talked about So I can leave the account open. I can shred my credit card. So it still counts for a while, you said. And then I guess they look at it as inactive credit because you haven't accessed it.
Yeah, it may not be factored into your credit score. The utilization is still there.
But I'm thinking then I go use it maybe once for something little when I'm getting ready to start moving again. And I've got to believe that my credit score pops up nicely.
Yeah, absolutely. You make a small charge, like go get gas with it, pay it off right away because you have the money available. You would have used cash for that. And then put it back on ice, or put it away, lock it away.
That is a good idea. Yeah. Because I have my oldest American Express, like the blue, that's so old, but I have my Netflix on auto pay on that. And that's the only thing I have on it.
How many different lines of credit, Lamin, do you keep open to keep your credit utilization rolling?
So I have probably 6 cards. Frankly, I haven't counted them in a while. So back to the point of being inactive, to me, the biggest fear is not that, it's not going to get factored into the score, is that I'm going to get dropped because, a lender doesn't want to keep, a card company doesn't want to keep an open card that they're not making any money on. And ultimately, it's a cost center for them. They have to report your line. They have to manage the account. If you're not using it, they will shut you down. And they have different tolerances. Some will keep you open for years. Others will shut you down in months if you don't use it.
Okay, so back to my philosophical question then. Is that okay? Like, if I got crappy credit, maybe that's okay.
I mean, look, I think it's an extreme approach to credit management, saying that I don't need any credit. We deal with customers like that all the time. We had a customer who joined the platform who 30 years ago decided, I got screwed by the credit system. I paid off all of my obligations. I'm not going to use it ever again. I'm just going to live on cash. That was a really tough, it's like a austere living. You don't have access to being able to borrow anything and capacity is gone. You have to rely on your savings. That is pretty extreme. And if you compare it to, say, a diet, that's like, cutting out all nutrition and just living on bread and water just because that's all you need to survive. And then when he discovered our platform, he's like, I love this because it keeps me disciplined. It's not like a card that I can run up accidentally because I have tendency to do this stuff because I can't control myself. And that's why I've been living on bread and water. But here, I pay my bills that I'm already paying. Like I have to pay them every month, my rent, my utilities, my subscriptions. And then I have to pay them back to you guys, usually within 30 days. And so as a result, like it's better than a card, but it looks like a card. So now my credit is active. And that's kind of like the solution like that. I think that's what you should look for, where it's not extreme. You're not cutting off your arm just because, you can't stop eating. So that's the way I would approach it. It's find a balance. It's got to be a balance. But there, checks and balances that you can put in place, like physically shredding your card, right? If you really can't stop shopping, maybe you should shred your card, but don't cancel your line. I think this is going to be damaging. It's going to have a lasting effect on what you do.
Crystal, how did you start getting your credit in order when you started turning things around?
Well, I was afraid for a very long time. I just stopped using cards altogether. But my
almost
first
like the guy
card,
in Lamin's story.
Yeah. But the first card I got long time ago, Orchid Bank, they had a secured credit card. So I had to send them I think it was $500 was a lot to me back then, but I had to send them $500. And then I had a $500 credit limit. So, I had to stay with it below that $500 limit and I could, spend and pay off. And then I think finally I got that first American Express when I got a real job, quote unquote. And then I thought that was my best credit card. And then I put it on auto pay. And I had a question about how do you guys reach the people who are like my mom? And they're like, I'm not putting anything on auto pay. And she will write a check for every bill and walk it to the post office to mail it. She's like, I have to hand them my bill to make sure, it makes it.
Lamin's nodding like he's heard the story before.
Oh, I have many times. So, you have those extremes. And unfortunately, they can't use our platform. Our platform is designed for internet bills, right? Like you already been paying those things online anyway and just paying it using us. But we do have people in the middle where you paid some of your internet bills, but you also still write checks. And it's not because you want to write checks. It's because like some of those billers only accept checks. And believe it or not, there are a ton of them. Like property managers. There's so many mom and pop, landlords. And the only way they get paid is hey, you got to write me a check. And we've been dealing with that problem. We have solutions out the wazoo here, but it's still an ongoing issue. We're trying to figure out how to convince them to accept maybe a digital check or a set of ACH credentials where we can wire you money or ACH you the money. And so, that's the thing that still exists, especially in the United States. It's weird. Checks are virtually non-existent in the rest of the world, but in this country, people write checks. But what we discovered for folks who like to write checks personally, they write them as a form of credit as well. They're basically kiting checks because they know that, I don't have the money today, but I know for a fact I'm going to get paid in 3 days, but I really need to buy this thing. I need to pay this bill. And they'll write a check. So they prefer it because it's like an invisible hack into a credit line that the bank gives you because it takes 48 hours, sometimes longer, to settle a check. And that's a difficult thing to break because that's really free money.
Remember the online stories? Yeah. They'd be like, write it in all red and it'll take even longer for that check to clear.
You will do creative stuff, for sure. But that's a testament to the fact that credit is really important to people because people live paycheck to paycheck. And sometimes it's just, it's just a couple of days that you need. And a check gives you that freedom to say, here's the money, I'm good for it. But you really don't have the money at that moment in time.
Christina, I know you guys are doing research all the time at Experian. Behaviorally, what are some behaviors of people that have good credit? Are the things that they do that people with bad credit don't do? Are there techniques that they use that people with worse credit don't use?
It's just prioritizing their bills, financial education, prioritizing financial education as well, learning the tricks and tips to improve their credit score and, kind of playing the game. It's really interesting when you start that rebuilding your credit process. It actually is pretty exhilarating when you start to see that number go up. The other thing that they do is they check their credit score often. So we recommend checking your credit score often, especially if you're on a building and rebuilding process. So you can get your credit reports for free weekly from each of the 3 credit bureaus at annualcreditreport.com. It used to be that you could only get it every 12 months, but now because of the pandemic, they actually just decided this week, they announced that you can have them indefinitely for free weekly. So that's a great resource if you're checking your credit and you're on that process to build credit or improve your credit or even just manage your credit. And then also Experian offers free credit monitoring every single month. So you can get your Experian credit report and your FICO score, and that will tell you what's helping and what's hurting your credit score. So they're really knowledgeable about what is impacting your credit score, because once you get your credit score, it comes with the factors that are helping and the factors that are hurting your credit score. And you can actually take action on those factors. And it's specific to you. It's telling you what in your credit report is helping or hurting you. And so that's a really great step to take. So they monitor their credit regularly. They pay their bills on time. They don't take on too much debt. They live within their means. Those are people that are really managing their credit well. Now, there are some people that I've talked to also that have said, wait a minute, but I had like $100,000 in credit cards and I had about 50% of that used, but I still had a great credit score. Well, they figured out how to game the system, but typically we don't advise doing that. We advise, not carrying a ton of debt on your credit cards, making your payments on time. Those are really great steps to take.
It is interesting to me when I started getting the Experian credit monitoring. What I loved was the part, and I don't want to be an Experian ad or a StellarFi ad here, but what I liked was that it was specific to me. It said, hey, Joe, here's what's holding you down. Here's how to fix that. Like, it wasn't just all this education. It was like, need to know right now for me, this is what I do. And to your point, I don't know about you guys, but when I started getting my credit better journey, I did look at my credit score a lot, and that helped me gamify it. It did become a game. Where instead of how much money can I spend, now when I, go to buy that thing, it was, well, I really want to see if I can get this thing up. And Lamin, you were talking about how your credit score has a wide range. Mine still does too. And it's funny because it's almost predictable. I will buy some big ticket item. I'll put it on my credit card, and then I will see my credit score go down reliably maybe 10 days later. It isn't an immediate thing, Christina. I see it like as a bump in the road, like a little ways down.
Yeah, so it takes a little while for your lender to report. So again, lenders only report to the credit bureaus once a month. So you may not see that balance updated right away. So if you make a big charge and you look at your credit score tomorrow and you go, it didn't really impact me, wait a little while, but make sure you pay that off, and then you'll see that score go back up typically pretty quickly. Again, after that next month, usually.
People, Lamin, same question for you. I asked Christina about tips and tricks for people that do that well. People on your platform that are really using it most effectively. What are the behaviors of those people?
They pay their bills on time. They're usually pretty good with money management in general. So, when we look at the money flow, they always have money when the bills are due. Folks who kind of struggle with their credit scores just frankly don't have the money at that moment in time. A lot of it sort of flows out around paydays. To me, that's the most critical thing. It's to really think about your outflows and the days when the money is sort of leaving your account. We are working on some features to help people wrap their minds around this, because the velocity sometimes is crazy and it's really difficult to grasp. It's abstract somewhere out there. You don't really think about it. You just get paid and then suddenly the money is no longer there. We want to help people see it. When you visualize it, when you see the money leaving, it becomes more tangible and you become a lot more conservative in letting it go. It's almost like cash, right? I don't know if you guys ever heard people saying that, like when you're paying with cash, you're a lot sort of cheaper than
Oh, yeah.
when you're paying with a card.
Yeah.
It's real, right? It's there in your hands. And that's kind of what we want to do. We want to contextualize it. We want to make it more tangible and real. So now that, you see a bank account, and the real thing is not a pair of shoes you're about to buy. The real thing is that money you have on hand that's about to leave. So anyway, all that is to say is that people who do well with credit, unsurprisingly, do well with money management.
That was a lie, Crystal, that I had to realize. And the lie was that if I just made more money, it would help my credit. It would help my bad money habits. Like I could just make more money and it would make my problems go away. And I think that's the big lie most of us tell ourselves. So the year that I was really a disaster and the downfall happened, I think I made $85,000 that year. I could have made 100. I made 85, I spent 100. If I made 100, I would have spent 120. If I made 120, I would have spent 135. Made 135. It didn't matter. I had to do what Lamin talked about and really get my budget locked down. But the other thing was, and this is what I started helping people like real estate agents with, that would get these big checks. They would live, to Lamin's point, hand to mouth. So what would happen is you get this big commission check and you take the family out for a big steak dinner and you buy a big screen TV on credit because you don't know how long that money's going to be around. And then you have ramen noodles. So it's ramen noodle, steak dinner, ramen noodle, steak dinner. Like it's this horrible thing. So what we would do is we would take that money and put it in a separate account that was a little bit away. And I don't know, Lamin, if this is what you guys are kind of dreaming up at StellarFi, maybe in a different way. We put it in a different amount and then create a paycheck that's the same all the time. So we could solve the problem, Lamin, that you're pointing to, which is getting that heartbeat so it's more regular, so that we can predictably have money available at these times, like somebody who works a 9 to 5. My commission salespeople really had trouble with credit more often than people working a 9 to 5.
Absolutely. Because non-recurring income is one of those things that you really can't grasp as a person. It comes in various different times. Sometimes, like you said, commission checks are big and you get out there and you buy yourself a steak, buy a family steak. Other times, a commission check is smaller and you have to, eat your ramen. And so as a result, you don't have consistency in managing your accounts. That's why it's so challenging for freelancers. And there's a massive, freelance economy now, the gig workers and so forth. It becomes even more challenging for folks who are not, living W-2 income that's consistently the same across, week to week or 2 weeks, every 2 weeks. Yeah. And you mentioned gamification earlier. And, when people talk about gamification, everyone thinks, little badges and funny things that come out of the app. It's not that, right? It's gamification as behavior building and creating these actionable things or experiences, like a savings account, like saying that every time I pay a bill, I'm going to allocate $10 into the savings for a rainy day or for whatever, right? For like overdraft. And that's gamification. You're creating a game, you're creating a set of rules, and you follow in those rules. And hopefully the game is designed to help you in times where you have sort of maybe inconsistent income or maybe like an emergency or so forth. So when you start thinking about savings or planning more as a game with a set of rules and you become competitive, you compete against yourself, you get more effective with budgeting versus some arbitrary, thing that you have to do because you have to be responsible. And that's how money is usually presented to everyone, right? It's, you got to do this because that's the smart thing to do. And of course, none of us want to do it because we don't get it. We don't really understand why. But when you quote unquote gamify it, you make those rules and you compete against yourself, then it's a lot easier to make decisions that will help you in the long run.
That is true. I love all of my tools where I get to, because I'm an addict, I check all my accounts every day. But a lot of them, they'll say, let's see, what you spent today. And then it has like a little chart that, increases. I'm like, please stop moving, And then some days I do the ostrich when I know it's bad and I don't even look. But I do like the gamification factor of it'll say red, green, and blue. And I liked Christina's earlier point about, I know they say some credit monitoring. I'll never forget this commercial where they were like, yeah, we're monitoring a fire at your house. And they're like, well, why aren't you putting it out? And they're like, no, we're the monitoring company. You can have somebody else go put it out. You know, you guys actually give the tips to say what you're doing wrong and right. So what about these people that are saying, hey, I could fix your credit in 2 weeks? Like, what are the red flags? You know, what can go wrong with that?
I mean, that statement alone is a red flag, right?
And a red flag is anybody that wants you to pay them to do something that you could do for yourself for free. But a lot of people don't realize it. A lot of people, there's so many misconceptions about credit, like that checking your credit score is going to hurt your credit, that you don't have the ability to go in and affect change on your credit report and your credit score. You do. You have the ability to go in and check your credit. You have the ability to go in and dispute anything that is inaccurate. Now, if it is in fact not correct, if you did in fact make a bill payment that was reported, that you believe was reported incorrectly, you have the ability to dispute that yourself. You don't have to pay somebody to do that for you. It's right there in the platform. There's a dispute button when you check it online, and you could do it yourself. So a lot of people, they charge fees for your credit report. They charge monthly fees, very expensive fees. And if you're already struggling to pay your bills as it is, now you're adding another bill on top of it. So that's a huge red flag. And then also, I really quickly want to go back to Lamin's point about saving, because that is so huge. So many people are living paycheck to paycheck. They can't afford a $400 expense or, emergency expense. So setting aside even just a little bit every single paycheck, $20, $10, doesn't have to be a massive savings, whatever you possibly can. If you could just set that aside and start to build that out so that you don't have to rely on credit when you're in the process of building or rebuilding your credit. You don't have to rely on credit to get you out of a jam that you then now have to pay back. So really prioritizing that saving is important.
I think that was huge in my personal journey, Christina. And then second, what I found was even when I had that money, I now had developed this reflexive, just reach for the credit card. And I had to solve that in my head as well, which brings me to another thing. We've talked a lot about behavior. Christina, back to you. How much of this do you think is mindset? Is just, Lamin talked earlier about how we live in this country where we get tax breaks for big loans. Go buy an airplane and you'll get a monster tax break. Buy an electric vehicle. We give loans for debt. How much of this is changing your mindset?
It's huge. It's huge because, you can have access to any kind of credit. You can have access to credit if you have bad credit. You can have access to credit if you have good credit. It doesn't necessarily mean that it's going to be affordable credit, but it is about having that discipline and having a plan for how you're going to use that credit, having a plan for how you're going to pay it back. It's really important to get those processes in place, especially if you're trying to build your credit score, if you're trying to keep your credit score at a certain number, if you want to invest in a property. And also, if you are planning to purchase a property, don't make a lot of changes right before you're going to go and apply for that loan. So it is really important to have these processes in place so that you know what behaviors are helping or hurting your credit score. You know when your bills are due every single month. You know when you can put money in savings. It just comes down to processes, I think.
Lamin, what type of change do you see in people's, you got to see aha changes with people that don't pay their bills on time all the time. All of a sudden the bills are getting paid every month.
Yeah. So our whole purpose is kind of a behavioral change, right? We want to implement a framework to help people kind of manage their behaviors. And we do see those changes. People realize that, oh my God, if my bills are paid on time, my credit actually spiked by 100 points in the last 3 months. That's crazy. That's amazing. And it's kind of a dopamine rush. And we believe that, right? We don't have evidence of that, of the chemical changes to people's bodies. But we believe it's a dopamine rush.
I would love that if you guys, if because Lamin knows, I love Vicky from your team who leads up a lot of your marketing efforts. I'd love it if she would send people like these little electric, modules.
I would love that too. That data
before they log in. Yeah,
that's right. We can see that the chemical changes. Yeah, it changes. It really does change. I don't know if it's going to change on behavior in the long run. I tend to be a skeptic. I think behaviors change very, very, very slowly, especially the ones that we've been conditioned to do certain things. And you're right. In this country that revolves around credit, credit is culturally, it's fundamental to everything that we do. It is part of the American dream, right? It's being able to access something that you, quote unquote, haven't earned, right? Someone's given you their money. And we're so conditioned to sort of like treat that as a right. and not necessarily a privilege, is that we get ourselves in trouble. Leverage is a very powerful thing. Leverage is what gives us all the things that we have in this country and all of the resources. But if you don't have the discipline to manage that leverage, it will crush you. And so we want to create an environment where there are mechanical constraints to help you be more disciplined, like a personal trainer. For example, when I started building my first company building is so tough. I got really out of shape. I was eating bad, I was stressed out all the time. And I used to be in shape pretty much the rest of my life. And this is the first time I hit the rock bottom, and I'm like, I need help. I need someone to tell me to get up and tell me to go exercise. I know how to do all this stuff, but I needed a person to tell me this. Mm-hmm. And this is kind of like what we want to do. And, frankly, you don't need an app like us. I mean, you just maybe need a friend who knows what they're doing to tell you, hey, pay your bills on time, save some money. Of course, it's easier when it's automated through an app.
Oh, so much easier. I had the same process. I was really out of shape as a financial planner, realized that I need to get my butt back out and working. So I had to go hire somebody because I would not show up at the gym on my own. But if Nathan was waiting for me, I would show up. And just a funny story, Nathan was laughing near the end of our first workout because I was puking. Which I think is a badge of honor for those guys. Like, look at what I made
we broke them.
Look at what I made the doughboy do. Right. Yeah. Last question. We obviously didn't focus much. Christina, I'm glad you brought up real estate because we didn't focus on this because I think this is just fundamental for everybody. Mm-hmm. And whether you're buying a property, I see so many people get into real estate, and you do too, Crystal, that have horrible credit and they think that property is the best way out. And this is an asset that is illiquid. Yeah. It frankly can really sink you because if you don't get it right with a house, you can't just go peel off the bathroom when you need a few bucks to get yourself out of trouble. So I think you got to be really careful around credit. But let's ask our panel for real estate investors specifically, Lamin, any advice from you about credit and buying rental properties?
Yeah, absolutely. I mean, look, if you buy rental properties, usually financing them. I don't know many real estate investors that are buying them in cash. And so when you finance something, credit is critical because at this point, any tiny little changes in the credit score can translate to changes in interest rates. And that's an asymmetric problem that you're dealing with, going from 7% to 8% in interest on your mortgage loan to be massive over the long period of time. And so as a result, you have to be extra mindful of your credit score. So if you are in real estate and you're financing said real estate, credit scores are more important than ever because the size of the transaction and the corresponding interest translate to really high fees that compound over time.
Christina, you've got the last word.
Yeah, credit is huge when it comes to real estate because credit is going to be what qualifies you with a lender. It's not the only thing that qualifies you, but it's going to be what qualifies that interest rate, to Lamin's point. So credit could be the difference between a percentage point, a couple of percentage points that can translate to hundreds of thousands of dollars over time, over the length of your loan. And so if you're also not just paying higher interest, but you could be paying, that's going to translate to a higher monthly mortgage. And so if you're having a harder time paying your bills right now, imagine how much more expensive it's going to be if you have a high interest rate that's going to translate to a very expensive monthly mortgage payment.
You just made it worse.
Yeah, it's going to keep you really tight every single month. So the better your credit score, the better the interest rate, especially in a high interest rate environment where maybe the minimum that you're going to qualify for is a 7% interest rate. Any lower your credit score, it's going to be higher than that. So you want to qualify for the lowest possible interest rate.
That is a great cap on this discussion. And, people that know me know that I really like having people on who are just experts that have gone through this. They've walked this walk before and are really passionate about this. And you can see it in the work that you do. So let's talk about the work that you guys do. Lamin, let's start with you guys at StellarFi. Somebody wants to check out the platform. They want to use you to help get that regular bill payment in order. How do they get that done?
Yeah, just sign up on StellarFi.com. It's StellarFi.com. Right now we have a web application. We're getting ready to release 2 native apps. It's a very easy sign-up process. You create an account. You link your existing bank account. This is very important, by the way, for listeners. You have to link an account that you use to pay your bills. Otherwise, we can't analyze it. You can't just link a random, account with no money in it. And so you link that, and we then find the bills that you've been paying. kind of like what Boost does at this point in time. And we say, hey, it looks like you've been paying all of those bills. That's great. Now this is where we sort of deviate from what Experian Boost does. We then say, let us pay those bills. We're not just looking at your history. We're then going forward doing it for you. And then you link those bills on our platform. It's really easy. You find them in the population. There's a little search window. It's almost like Plaid. If you ever used it to link a bank, it's a very similar experience. And then we actually create a card. We create a Visa card on the back end that is remitting those payments. We are about to release a feature. If your biller doesn't accept a Visa card, we remit a payment via a set of ACH credentials. We give you that, and that goes inside of your bill. And that's it. And the bills are then paid on time. You don't have to log into your bills anymore. You can just log into a StellarFi dashboard to monitor the bills, pause bills, cancel bills, whatever you want to do. Also access all of your credit tools and credit education. You can see your projections. We do sort of an approximate what your credit score could be if you were paying those bills on time with us. And you have access to a whole bunch of different tools. Of course, your credit report. And right now we use Vantage scores, but StellarFi affects all credit models across 3 bureaus. That's our sort of a claim to fame that we're the only credit builder out there that does that. So if you want to build a score that matters to any lender, whether you're borrowing money for a car, for a house, to get a credit card, we will affect that score. And that's it. And so that's really set it and forget it kind of a thing. Of course, you don't want to forget it. You want to monitor it.
Right. Set it and monitor it. That's a
good one.
Yeah. And we will link to StellarFi on our show notes at stackingdeeds.net. And also, by the way, we talked about Christina's credit chats and the amazing Experian credit. I can't believe it's 11 years. I feel that makes me feel old, Christina. But you guys, Lamin, on Instagram, you guys do some pretty kick-ass Instagram lives with people doing good stuff.
Absolutely. And we engage our customers all the time. We have a lot of very motivated customers who are super happy about what's happening in their financial lives. And we get them engaged on Insta, on YouTube. And of course, we have a bunch of folks in the team who like to talk about credit.
It is a passionate group of people. Speaking of passionate group of people, thank you so much, Christina. I get so fired up every time I talk to you, Christina. You make credit so fun, which makes you such a weirdo.
Thank you so much. I know not many people who can say they're like passionate about credit education, right? But it's something that I know can have such a significant impact on somebody's life. And I love what I do. This was the perfect job that fell into my lap.
It is. You are built for this. But Boost is free.
Yes, Experian Boost is free. Boost is one of the programs that we offer where it's part of our membership. When you create a credit monitoring account, you have the option to boost your credit score by using your on-time utility payments, your streaming payments, your telecom payments. For so many years, we were hearing people say, well, why do I have to take on credit in order to improve my credit score? And so we started to come up with a solution for that. And that solution for us was Experian Boost, which allows you to add your on-time payments for free to your credit score to help boost your credit score. It won't factor in negative payments. Consumers have complete control of it, so you can turn it on, turn it off at any time. If you find that it's helping your credit score, awesome. If you find that there's no real change and you don't really want to utilize it, you can turn it off. But most of the time, we do see a good jump, about 13 points for people that are in the process of building your credit score. So it could be a pretty significant platform to use when in the process of building your credit. So again, free, and what's better than free?
Well, better than free is free and using both of your platforms, like boosting your credit score, which is funny because I was thinking one time about using something like StellarFi or Boost. And I was saying to somebody in the credit industry, I don't remember who, like, isn't this just, speaking of gamification, this is just playing a game and, smoke and mirrors, making yourself look better. And then this person told me, and I'm sure you guys would verify this, people that actually play these games are more likely to be people who are going to be good with their credit in the first place. True. Like the credit disasters are not people who are looking to get better with it. So it truly makes the game, you're kind of self-selecting as a winner. Have you guys found that, Christina, have you found that to be the case? People that use Boost are generally people who are on the way up?
Yeah, and that's the reason they're doing it. They want to be on the way up. They don't have the opportunity to add a bunch of trade lines at the moment, or they don't want to do that. They want to get credit for the bills that they're already paying. So yeah, anybody that's using Boost typically is somebody that's looking at their credit score and wanting to improve it.
Yeah, fabulous. Christina, Lamin, thanks for hanging out with Crystal and I super appreciate it. And hopefully we help people get some credit in order to go buy some more houses.
Yes.
You're awesome, Joe.
Thank you for having us.
Yes, Christina and Lamin. We really enjoyed this chat.
Thank you, Crystal. And that was just fun. I love this conversation.
Yes.
What a great show. Like, talking about credit was fun. But my first question to you, Joe, is if you don't have hair, how did you get a hair dryer to thaw out your credit card? Did you have to go buy a hair dryer?
Well, that's the thing about being married.
Aha.
I do have a spouse with hair. And what's funny is that, you know, when I got married, I was already starting to solve the problem, but I still went through relapses. And this was a relapse period. I had to put all these things in place to try to make sure that I kept my credit good. And I remember just one day my twins were tiny and I was so sick of just taking care of kids. And I'll tell you what I was doing. I was trying to buy a video game. I was like, I just want to go buy this video and I don't have any money. Oh, but I have my credit card that I put in a block of ice. I not only had the hair dryer, I started off running hot water over the ice. And then that just wasn't going fast enough because I remember, and this was horrible, I wanted to buy it before I had second thoughts because I knew I would. You know what I mean?
Yeah.
I knew I would. Yeah. It's like, you know, it's a horrible analogy, but somebody with an alcohol addiction who's drinking the next drink before they regret it, full well knowing they're going to regret it. So yeah, not great. But Crystal, for you, changing things, you know, how much was getting that payment structure down that Lamin talked about? How much did that help?
Well, yeah, it was the auto pay. Auto pay, I've been a huge auto pay fan just because I've forgot about, like, things happen. You do forget. So I love that I have the habit now of I check everything every day. So if there's a fraudulent charge on anything, I'm going to catch it probably before the bank catches it or before the credit card catches it. Just because I'm on it, I'm watching every day. But it's just the checking every day. I know when I do something bad, that's when I don't want to check and I don't want to have too many days like that. In blogging helped me too in the beginning days too, because I would post what I would spend every week. And so I did not want to post crazy spending.
On your sophisticated spender.
Yep.
Yeah.
And that helped a lot of people. A lot of people actually were really receptive to that.
You know, we didn't talk about that at all, Crystal, the accountability factor that gave you, right?
Yep.
I mean, you opened yourself up to the world and said, I'm holding myself accountable here.
Yep. My spending recaps. And it was a tremendous help. It was a tremendous help. So yeah, if you need accountability like that, I highly recommend doing something like that.
Any update this week on your property development? So you went and you talked to the neighbors, things are with the city and
yes. I have another meeting with the alderman coming up. It was funny because one of our permits got denied because someone owed money. And I'm like, who owes money? Then I've clicked through. I was like, oh, it's me. But it hadn't gone through yet from getting tickets from not keeping the grass cut. So when there's a program and they tell you, hey, keep the grass cut or you're going to get a ticket, you're going to get a ticket. So I had a ticket, but I had paid it, but it just hadn't crossed.
Hadn't gone through.
But I thought that was funny.
Yeah. Almost said cross the I's, dot the T's. That's probably not the right thing.
Let's start doing that around here.
Let's do that. All right, Crystal, where do people go to get the show notes?
Head to stackingdeeds.net/show notes, and then you will receive the handwritten show notes by me. And we'll have a lot of show notes for this episode because there are a lot of bombs dropped, like gems, not bombs, gems. Because I liked when Lamin said, you need the discipline to manage that leverage because people do talk about leverage in real estate. That's the best thing you can do. Debt is the best thing to have, but you also need that discipline. So look out for the show notes. It may just be a whole bunch of quotes.
The behaviors, the mindsets. I mean, so much goodness there. Yeah. And in our normal episodes, we take questions from you. So if you've got a question for us, send those to stackingdeeds.net/voicemail, right?
Yes. I'm going to say it fancier. Head to stackingdeeds.net/voicemail. That way we can answer your questions on the show. So, I mean, you're listening, but you're listening with more intent because you're like, all right, when is Crystal and Joe going to get to my question?
Yeah. You always say it better than I do anyway. So, all right. She's Crystal. I'm Joe.
We will see you next week. And then, Joe, what should we have learned today?
Doug, what should we have? I don't know what we should learn today.
Joe.
You said Joe. It's Doug.
Yes, Doug. Neighbor Doug. What should we have learned today?
So, what should we have learned today? First, take some advice from our guests. Bad credit can really cost you. It can cost you in lots of ways, from higher loan costs to difficulty renting an apartment to increased insurance premiums and more. Second, credit cards give you lots of leverage. Just make sure you have the discipline to manage that leverage. Autopay is your friend. But the big lesson? It's a big, big world out there, people. The fact that there's a witch dating site and one called Dead Meat for people in the funeral industry makes me think I'll just stay home and watch Gilmore Girls again tonight. Thanks to Christina Roman for joining us today. You can find her running the Experian Credit Chats at Experian. We'll also include links in our show notes at stackingdeeds.net. Thanks also to Lamin Zarrad for joining our roundtable. You can find out more about Lamin at StellarFi.net.
When was the last time you felt in control of your business finances? Expenses tracked, invoices sent, taxes ready. That's where Found comes in. Found brings your banking, bookkeeping, invoicing, and taxes together in one simple app. Manage expenses, invoice clients, send payments, and prep for tax time right where you bank. Join the hundreds of thousands who have already streamlined their finances with Found. Open a Found account for free at found.com. That's FOUND.com. Found is a financial technology company, not a bank. Banking services provided by Lead Bank, member FDIC.